Liz Truss has promised not to introduce any new taxes on or energy rationing this winter if she becomes Britain's next Prime Minister. That's still uncertain, of course. She's currently Foreign Secretary. She's made the commitments during the final Conservative Party leadership hustings last night in London. We will know the winner of the contest on Monday. Joining us now with analysis, Bloomberg's Ben Sills. So, Ben, what is Liz Truss's plan to tackle the energy crisis? Do we have any detail above and beyond saying, you know, we can do something?
Well, we're starting to get a few little nuggets of information. Our team on the ground in Westminster yesterday had a couple of quite important scoops. We know that she's considering cutting business rates for small companies who have been particularly hard hit by the rise in energy costs. And we also know that she's planning a raid on some of the renewable energy producers who've had a bit of a windfall from the surge in power prices. So we're starting to get a slightly clearer picture.
OK, and how viable is that? It's interesting you mentioned that raid on renewable energy because she's sort of ruling out more taxes, but there are other ways, I suppose, that they claw back that money. So, but how viable is the plan more broadly?
Exactly. I mean, I think there are a lot of concerns about it. I think that the fundamental problem is the talk of tax cuts at this stage of the game, with the UK likely heading towards recession. And the Bank of England hiking rates has investors very worried. Pound fell 5% during August. That's its worst decline since the aftermath of the Brexit referendum in 2016. And blue chip British companies are now paying more than 5% to borrow in the market. So that's a real sign of market tensions building. And that's before she's even got through the door at number 10.
Yeah, we spoke to Charlie Bean, who used to be at the Bank of England, of course, and at the OBR, and now at the London School of Economics. And he was talking yesterday about a risk premium now in gilt markets, so in UK sovereign debt. So I guess that takes me to my next question, which is what are the risks of this approach?
Well, I think what the fundamental problem is that the UK budget deficit, the public finances could start to spiral. Government borrowing demands would increase, and that would just place a lot of strain on the sterling markets, which have already been in trouble. Kind of beyond that, on a political level, we can see that there are massive tensions in the Tory party. There is not a consensus within the parliamentary party behind what Truss wants to do, and we've also seen quite strong indications that the Treasury officials who are kind of in charge of steering the ship, you know, beyond the political cycle, are going to be trying to maneuver her into hiking taxes on the energy companies in order to shore up the public finances. So you know, political tensions as well as market tensions. It's going to be a rocky ride, I think, for the new Prime Minister.